Okay, let's get into this. For the last, few years, the AI boom has felt like it was all about one thing: hardware.
Oh, completely. It was the shovels in a gold rush story.
Exactly. It
Yeah.
was all about the chips, the processors, just the immense cost of building out these foundational data centers. If
Yeah.
you weren't talking about silicon, you weren't really talking about AI investment.
That's absolutely right. Hardware was the engine. It really defined that first major wave, and the financial results were, well, they were just staggering. The companies providing that base layer saw unbelievable growth.
And if we look at the raw numbers from that era, they really tell the story, don't they?
They do. It was so heavily concentrated. I mean, you're talking about Nvidia, which became the undisputed leader in AI processor.
Holding something like 90% of the market.
An estimated 90%, yeah.
Yeah.
Its share price shot up by a phenomenal 950% over just the last 3 years.
Wow.
And right there with them, TSMC, the company actually making most of those advanced chips, their shares jumped nearly 250%.
So that was the hardware era, the foundation. But what our stack of sources is suggesting now is a really major structural transition. It seems like it's already happening.
It is. We are pivoting and pivoting hard away from that hardware focus and moving toward software, cloud services, and these very specific high-value applications.
Why, though? What's the change?
Well, the dynamic has shifted. A lot of that foundational capacity has been built, so now the economic value is moving away from how do we build processors to how do we actually use them, scale them, and, monetize them.
So this is the mission for you. We are going to do a deep dive into the reasons for this huge transition and really try to understand why our sources are singling out Alphabet Google's parent company as a primary beneficiary here.
It seems like they're perfectly positioned to own that software layer, that next phase of the boom.
Right. And it all starts with democratization, doesn't it?
It does. I mean, the high cost of that specialized hardware, it creates a massive barrier to entry. Most companies just can't afford to buy and maintain a whole fleet of specialized chips.
Which brings us directly to the first massive opportunity, the AI cloud.
The $2 trillion AI cloud opportunity.
That number is just so big it's almost hard to really process. When we say AI cloud services, we're not just talking about data storage, are we? What's different?
That is a critical distinction to make. This is about integrated artificial intelligence cloud services. So yes, it includes the simple stuff, customer-facing chatbots.
The things we see every day.
Right. But more importantly, it means specialized high-performance infrastructure that you can essentially rent. Think of managed pipelines for training large language models or getting access to Google's custom TPUs, their tensor processing units.
So it's selling the intelligence itself, not just the space.
Exactly, not just the capacity. And the market scale reflects that value. Goldman Sachs estimates that global AI cloud revenue could hit a stunning $2 trillion by 2030.
$2 trillion. That's the prize. Moving from the one-time cost of silicon to the recurring revenue of intelligence as a service.
And what's fascinating here is Alphabet's position in all this. They're not building a new platform from zero.
No, they're plugging it into everything they already have.
Everything. They have this established ecosystem that's just tailor-made for AI infusion. Google Workspace, the Gemini models, the entire Google Cloud platform. They can leverage massive existing user bases.
And the evidence suggests this is working. Like right now.
Right.
It's not a future promise. We have specific proof points that show this is getting adopted really, really quickly.
On the consumer side, the scale is just impressive. The company now has 650 million monthly active Gemini users.
650 million.
That tells you AI isn't just sitting in a data center somewhere. It's being used every single day, and the money follows that. Alphabet's third quarter cloud revenue, which is where most of these AI services live, it rose by a very robust 34% to $15.1 billion.
Okay, 34% growth is excellent, but let me just push back a bit here. Is that growth happening just because the whole cloud market is growing? Or is this really a specific win for their AI strategy? I mean, how deep does this adoption actually go?
That is the critical question, and the source material has a metric that addresses exactly that. How sticky is this revenue? Alphabet says that 70% of Google Cloud customers are already using the company's AI services.
Wait, 70%? That's a massive number.
It is.
But are those customers just, turning on one little feature? Or does that 70% mean deep mission-critical integration? Is it just 7 out of 10 companies testing the waters?
The analysis really suggests it's deep integration. See, with enterprise cloud services, that level of penetration, it usually indicates customers are building core workflows around these tools.
So they're all in.
They're all in. Using things like Vertex AI or those managed LLM pipelines, this shows real enterprise adoption that's incredibly hard to get rid of once it's integrated. We're well past the hype and into durable recurring revenue.
And that connects right to the core idea for you, the listener. The economics are shifting. The growth is moving from selling the expensive shovel, the chip, to selling the gold processing service, the cloud platform, that everybody needs.
Exactly. Once the hardware's in place, the returns flow to the companies that provide the most scalable, the most democratized, and the most widely adopted software. And it looks like Alphabet is positioning itself to be that dominant platform.
Okay, so that covers the digital world, that huge $2 trillion cloud opportunity. Let's pivot now to the physical world, the next major area for automation that is completely dependent on complex AI software.
Autonomous vehicles.
Autonomous vehicles.
This is the second great gold rush for AI. I mean, outside of maybe some advanced industrial robotics, AVs represent the biggest tangible market where the AI software is the product.
And the numbers here are just as staggering. The source material projects the self-driving car market will be worth an incredible $2.3 trillion by 2030.
Another huge slice of the future economy. And Alphabet has a significant established head start in that race.
Through Waymo.
Through Waymo, yes. And while the industry has a lot of competitors, Waymo is positioned as the undisputed leader in the U.S. in terms of actual real-world deployment.
So what gives them this lead? It's not just marketing, right? It comes down to time and data. Waymo has 16 years of continuous development baked into its technology.
16 years. That means they were tackling the hardest AI software problems long before many of their competitors even existed, and that time it translates directly into experience and safety. They've gathered over 100 million miles of real-world driving experience.
100 million miles sounds huge, but is that really an unbeatable advantage? Why can't other companies just simulate their way past that?
Oh, and that's the difference between just driving and driving safely. Simulation is great for scaling, but real-world miles capture what the industry calls edge cases.
The weird stuff.
The weird, unexpected, rare, and dangerous events that really test an AI's decision-making. You know, a pedestrian walking a giant inflatable banana across the street, or a construction worker waving a flag in some non-standard way.
Right. Things the computer would never predict.
Exactly. Every one of those real-world miles, every weird interaction, that becomes data that makes the AI safer and more robust. And that data set is incredibly expensive and time-consuming to replicate.
And they're already monetizing this lead. The sources confirm Waymo has operational revenue-generating services in 5 cities right now,
With plans to expand to 3 more very soon, so they're constantly refining their models with every single mile driven and every dollar they earn.
It's this deep, sustained investment in AI that started years before the current boom, and now positions them to capture a huge piece of that $2.3 trillion market. Again, through software and services, not by selling hardware.
Precisely.
So we have these 2 massive future growth areas, the cloud and autonomous vehicles. Both require enormous investment, which brings us to the company's core business. Because before this AI boom really took off, there was a huge fear among investors about Alphabet's main cash cow.
Ah, yes. The narrative that generative AI was the great existential threat to Google search.
Right. The fear was simple. If a chatbot can just give you one perfect, summarized answer, why would you ever click on a link or an ad again? It could have destroyed the advertising revenue that funds everything else.
But the reality, based on the Q3 performance numbers in our sources, has been the exact opposite. AI is acting as a powerful catalyst for their core business, not a threat.
This part is so important because it's the fuel for all the other investments we just talked about.
And the hard numbers are undeniable. Alphabet's ad revenue rose by a strong 12.6% in the third quarter. It reached $74.1 billion.
That does not sound like a business under threat.
Not at all. It's a business that's leveraging its new tools.
I found a key quote in the material from CEO Sundar Pichai that explains how this works. Can we just walk through his reasoning? Because it really felt counterintuitive when everyone was predicting doom.
It connects the dots perfectly. Pichai said that AI is driving an expansionary moment for search.
An expansionary moment.
Yes. His logic is that as people learn what they can do with these new AI experiences, asking much more complex questions, generating ideas, they actually come back to search more often. The better tools lead to more engagement.
So better utility leads to more use, which means more chances for advertising. He also talked about the wider web, which is critical for everyone who creates content.
Yes, he made it really clear that these new experiences are built to highlight the web. They are still sending billions of clicks to websites every single day.
So the fear that AI would just create a walled garden of information seems to be, well, not happening.
It seems mitigated by their strategy to integrate the results rather than isolate them.
So the conclusion here is pretty clear. AI hasn't killed Google search. It's actually the robust engine for growth that's funding these huge bets in the AI cloud and autonomous vehicles.
And that's the unique combination. You have this powerful, established AI-fueled ad business. You have clear market leadership in the $2 trillion AI cloud opportunity. And you have this massive established lead in the $2.3 trillion future market of Waymo.
Okay, let's bring this all together. Let's synthesize this into a final takeaway for you. This isn't just about one company. It's about understanding a major shift in where capital is flowing. The sources are telling us that investors are moving from betting on the infrastructure builders
The hardware companies.
to betting on the value extraction providers,
Yeah.
the software and service platforms. And Alphabet is poised to benefit because they have these three distinct ways to extract that value.
And this raises, I think, a really provocative final thought for you to consider as you process this shift. We noted that 70% of Google Cloud customers are already using their AI services. We know that Waymo has a decade-and-a-half lead with over 100 million miles of real-world data.
Right, these aren't projections, they're current facts.
Exactly. So given these established facts, this level of integration and adoption, does this suggest that the shift from hardware to software dominance is less of a future prediction and more of an already established market reality that the rest of the world is just now starting to fully recognize?